AMD had earnings this evening. Overall, they were fairly good, and we're going to dig into it. NASDAQ got over a key level today and is holding it after hours. Snap's quarter was not that awful, but they gave us a little surprise. EA with a huge miss. We will be addressing the S&P and why today's move was substantive. Why Meta may bounce, even though Snap might go down. How we traded MSGM today. Let's start with the mover. So AMD is up after hours. You're up about $1.50. You were up to $78 earlier this evening. Now, why this is important is because we were waiting to see which way semiconductors were going to go. Semiconductors have been the leading sector. Now, if we dig into these, it's pretty obvious. 69 cents versus 67 cents. 5.6 billion versus 5.5. AMD data center revenue was up 42%. 1.7 billion. Client segment revenue down 57%. There's two areas that are somewhat concerning, but you're not really seeing that in the center business. But this client segment revenue business is down, and she did explain it a little bit on the conference call. You had decent enough numbers that you rallied into the call, and now with dealing with the conference call that's going on as we're recording this, we seem to be holding. So barring anything else, we seem to be okay, and people seem to be digesting the news ahead of the Fed meeting tomorrow. Now, I thought this was a pretty interesting statement. AMD sees elevated levels of inventory with some cloud customers, which will lead to a softer first half, stronger second half of the year. So the majority of people are coming out and saying the same thing. They're saying that the first half of the year is going to be weak, but the second half of the year is going to be a lot stronger. Now, why is that important? Well, that's important because at the end of the day, we're going to go on future earnings, okay? We go on future earnings. AMD says PC market, we are planning for a PC total adjustable to be down 10%. Not the end of the world. Says we enter 2023 overall demand environment will remain mixed with second half of the year. Okay, so overall, this was fairly decent. So we have a decent report where we didn't run up and fall down like we did last time, and we're hanging in there, and we're sitting right at some key levels that we're trying to get over. And no, we're not lighting the world on fire after hours, but we're also not falling off a cliff. So I think overall, with the guidance and what she stated, we should take it and we should be happy with it. Now, what do you do tomorrow with it? Watch the 76, 72. You're battling that a little bit after hours. When you try to kick up to here into the 78 range, 79, and get close to that 200 after hours, you had some issues. I would expect that to be a sticking point. I don't know what's going to get us through that. But for tomorrow, overall, I think it's fairly decent unless some other time bomb comes out while this is being recorded, but we're hanging in there. Snap, on the other hand, you actually beat. We're in line on revenues. This is what's killing the stock and why I think it stops with Snap. Given uncertainties related to operating environment, we are not providing guidance for revenue or EBITDA for first quarter 2023. Their DAUs, daily active users, were up 17%, which is much better than we saw last quarter. Snap reports Snapchat reached 2 million paying subscribers in Q4. That's really good. Okay, so these numbers were not awful. What was awful is management, and we're all aware that management is the problem there, and there's not much they can do about it because of the way voting shares are structured. So you're down at about 9. You got to about $10, and you've been bouncing around there ever since. You really have not gotten anywhere out of there. I'll pull this up a little bit, make it a little easier to see. Go from there. Make sure you subscribe to this channel. Click all notifications. What we go over is extremely timely, especially with the updates and alerts lately. If you see how you're just kind of riding up here, but you're just sitting right in this range. I mean, you should be able to see this, but what I'm going to do is I'm just going to pop that line in right there so you can see it for yourself. And let me just drop that and we'll go right from there. You should be able to see that level. So you're just playing around in here, up over it, bouncing below it. I don't really see a need to do anything. Where I think that there's an edge, I think there's an edge in Meta, and I'll explain why. So in the Alpha Chasers community, one of the things I said when Snap came out with earnings is I think the way to play it is to do Meta long. Now, what Meta did after hours was pull back along with Snap, and then it gave us this reversal pattern right here. And you kind of got a little bit of a sign there like, hey, this is probably, you got to forget these wicks. Hey, this might hold in here. I'm thinking it might gap fill tomorrow. I think it might gap fill tomorrow. Meta did not come out and say, we're not giving guidance. Snap did. There's a distinction there, right? Versus if you take a look at Snap and how they acted, they never came back really, right? right from that level. And that's really what we want to focus on. Like, they never really came back. And the importance and significance of that should not be understated, right? You're just kind of hanging right on that level. The other name bounced. Meta bounced. Why? Because Meta might give a really decent report if Snap just gave a decent report. What hurt Snap was not the report. It was the fact that they're just not going to issue guidance. The market hates uncertainty more than anything. So this may be an opportunity for Meta tomorrow. There might be a trade there. Obviously, we have the entire Fed tomorrow that we have to watch and see how that plays out as well. Now, in regards to MSGM, we traded this today and I just want to walk through it. And I would put this on my radar for tomorrow. I'm not so sure that this is over. What you can see is you can see that 4 a.m. where the market's open and people have some access. Not everybody has access, but people get some access there, okay? You're coming across and you're doing exceptionally well and holding that 4 o'clock level. You have some understanding of where you're at. They converted debt to equity. I think you're going to see a lot of this year. I think you're going to see more of these kinds of moves in these smaller cap names. And then we just kind of watched how we acted. And then around 7:45 in the room, like, hey, you might want to watch this. Put it on your radar. The volume's through the roof. And we kind of poked up over here and started picking at it a little bit. And then you just kind of started to develop, picking away at it. And then you have these two dojis just sitting here after we break out. And the thing about these dojis are, these wicks are price rejection, and that price rejection falls right into line right here, okay? Then we pop over and look at that close. I've encompassed those two. Well, that was pretty much all I needed to see, and I put the position on. Then they did the little flim-flam shakeout, but they gave me this bar, and the body of that bar is still in here, isn't it? So I really didn't have anything to worry about. Then we had the run up, pulls back, and then you kind of get that look like, okay, that might be it. And then what we did was just look at this little move right here, and that was it. It was risk on for those that might not have done it pre-market. So, and now the question is, what do you do with it? Well, you can't really be looking at 15-minute bars with these things because you just don't know how they're going to go. Just how you should look at trading these names. You're going to see these gaps in here, and these gaps are going to be the halts. So what we had is we had a couple halts in there. We had three, I think 4 actually by the end of it. But you have these little gap ups where you get so much energy, and there's one of them. What I'm doing with my position is I'm scaling out into these. Okay, I'm scaling out into these pops. I'm not cheering, talking about how smart I am. I'm scaling out into them. You have a little 3-bar pattern here. That's great. We break out of that 3-bar pattern. I'm scaling out into this. Okay, I don't need to be the last person in. I just need to scale out. So you're scaling out into the rips. You're not buying the rips. That's what retail does. Don't be retail. And then what you start doing is you start seeing Wick City. We start getting a couple more pauses. By the third halt, I'm usually out of the majority of the position. I am out of the majority of this, but my cost basis is so low that I decided to hold a little bit of it. Not a lot. Less than, probably around the third, okay? And it's something I can't get hurt on anymore. I'm not sure this is done. The way this got squeezed today and how these names have been getting squeezed in the past, you might get 1 or 2 days out of this. So I really just kind of want to see what tomorrow brings. Now, on an hourly, I'll just state this. This is my hourly range. So if I break through this tomorrow on the downside, what's going to happen is I'm going to get out of the way. I wanted to point this out for a reason. And those that have watched that candlestick video, I'm going to do an updated candlestick video after I do this day trading course. But everyone will recognize that as a bullish harami. So I've got a bullish harami that's being formed after hours tonight, right? Right on here, holding that level. You flip that tomorrow, and you might want to just write that level down and remember that 1955. You flip that tomorrow pre-market, you could probably see a move here. Watch this also into the close tonight. I just don't think it's done. And this is why. Here's an hourly, okay? And now you're looking at this bar and you're not even down 50% of that bar, right? So you have a high tight flag right here. You have an hourly high tight flag on a monster where everybody's short and they no longer have any debt. It's a nice one to be long and see if I can catch the wave a little bit more. And obviously we did exceptionally well with this, but that's what we're shooting for. Going over a little bit tonight. Try to keep these to 10 minutes in and out. What a lot of people that do that are in the Alpha Chasers community that watch these and also the other videos, sometimes they put me, actually everybody does it. They just put me on like speed and a half, I think is what they do. If you're interested in joining the Alpha Chasers community, just click this link right up here in the top right. It's also a link in description to get on the wait list and also to get the newsletter. Newsletter's free. Links in description. I wanted to go over this. I wanted to go over this for a reason. Now, with Tesla, this level, I'm not going to even put in moving averages or anything. You should know that you're up all the short-term ones and your 200's up here. You should be able to just eyeball that and understand that all those moving averages. If you have a cup, you're above them all. Except, maybe your majors, maybe you're 55, but we know we're above the. So anyway, why am I showing you this? I'm showing you this because this pattern completed itself today with this test. And then we retested the top of that doji and we held. And I'm going to zoom in on this because it's really very technical, but you might want to just watch this a couple times because this is a pattern that's pretty vicious when it executes. So here's our level and we can all see that pure bonk level, right? Bonk, bonk, can't get above it. Wicks or what? Price rejection. Okay, simple enough. So now we're sitting right on this key level and we can all see that key level, right? And then what do? We flip, and then what happens when we flip? We undercut that bar. Then we move up past 50% of this bar. That is a piercing pattern. That is a classical definition of a piercing pattern in candlesticks. It doesn't get any clearer than that. I would strongly suggest, depending on what types of charts you like looking at, that you understand candlestick patterns. They've been around since the 1700s for a reason. So if you see that flip right there, okay, and now you've cut in there, all you're looking to do on this trade is just get above that level. You want to get above that 174.38, and then you want to kind of see how you act from there. Once you get through there, that 177.56 level is what you're going to want to watch. This was the same exact level that when I was long and I broke, I got out. So I'm going to want to watch this carefully because if I break that level to the upside, I don't really have a lot until that's going to stop me from getting back to 200. And that's something I'm really going to want to pay attention. Now, EA was a disaster. I'm not going to get into it. It was just bad all across the board. This is your support level right in here. Look where you are pre and post. So you want to see if you're going to hold 114.20 tomorrow. Now, if you hold 114.20 tomorrow and you hold in that area, you may see a bounce. And you're going to look at that and go, well, that's kind of crazy. To think that, well, this is it selling off last time into earnings, right? And then this is the reversal. So can we see something like that? Yeah, you can. Depends on the short interest. There are much, much better names to play out there. I just want to touch base on this because a lot of people are going to look at this and go, it's dead. I should be short. And I just wanted to point out this major support line. So you're not stepping on a landmine to start your day tomorrow. I want you to focus on this level. This is really significant. And I'm just going to point this out. So forget the post and we're just going to look at the data. It's right in here. So here I have a DTL. DTL stands for downward trend line. I break the downward trend line like we're going to smash, and then we don't. I got a whopping 1 day down where everyone's telling me that we're going to roll again. We, in fact, did not roll again. Please watch the video that I'm going to put at the end of this. It's 4 minutes long. It explains why home builders are going to continue going up. Look at the home builders today and watch this video. It's 4 minutes long. So if you see right in here and you see how this is going, you're going to want to pay attention to this. So now you flip that bar up, right? Let's zoom in on this. Then you flip over that. Okay. So I didn't really want to open here. I would have liked to open gap down and then have the ability to possibly encompass that. We held this DTL and look at that close. So for those that are saying that the market peaked, well, obviously it didn't peak already because we just got a new 2023 closing high. So if you thought that this close was the high, within 24 hours, you're already not technically accurate, right? So now the question becomes, what do we do? Well, we're going to have to watch what happens with the Fed tomorrow, okay? And just understand, it's really simple. 25 basis points and the market probably goes up. They're not going to really pay attention to what Powell says anymore if they do 25 basis points. Yes, his comments can have weight. Of course they can, depending upon how aggressive he is. The comments that we're seeing, I don't think they're going to be like that. And then what we would want to do is see how that acts. Now, if you get 50 basis points, you might drop. You might come in a little bit, and then they're going to want to see what he has to say. If for some reason, which they're not going to do, but if they did 75 basis points, this would be a disaster. People are going to talk about the terminal rate. They're going to talk about sticky CPI. It's becoming increasingly clear that the Fed's hands are tied. That's it. Have a great evening, everyone.